Hi everyone, I want to welcome you to the ABCs of VSA. My name is Lauren Snedeker and I will be your happy host. Thanks for tuning in. I want to first give a congratulations to everyone who was in the Australian mentorship. I heard that you were invited to trade today and that collectively you guys did really, really well and everyone was thrilled. So a definite congratulations to all of you that have gone out there. People have asked if this recording will be available. It'll be available on YouTube, and the last 2 weeks are available under our events page on our website, and you just scroll down to archived events. There was a problem with the format, I guess is the word, and I wasn't able to update the last 2 onto YouTube. So I'm working on that. When Gavin gets back from the UK, I'll be able to do that. So, okay, let's begin. We're going to talk about signs of strength today, and we're mostly going to focus on the test. So here is a quick quiz. So let's see if you can fill in the blank. All right, so take out your pen and paper, and we'll begin. Oops, got to go back. Hang on. What is strength? Ready? Strength appears on a blank bar. There's no need to tell me. Just put it on your piece of paper and we'll go over the answers in a second. Strength appears on a blank bar. So write your answer down. Number 2, signs of strength are stronger in a what kind of market? Again, you don't need to tell me. Just write them down on a piece of paper and then we'll go over the answers. Signs of strength are stronger in a what kind of market? This is a period of what by the smart money? What is this phase or period known as? Okay. All right, number 1. Strength appears on a up bar. 99% of the time, strength appears on up bar. Okay? Oh my goodness, I just made a mistake. I'm sorry. It appears on a down bar. Oops. I'm really, really sorry. Strength appears on a down bar. I think I was just so quickly putting these in. Strength appears on a down bar. My apologies. Strength appears on a down bar. Weakness appears on an up bar. Sorry about that, guys. I will change this before I send out the presentation. My apologies on that one. Strength does appear on a down bar. Okay? Signs of strength are stronger in a bearish market. Okay, when the market is falling, you want to look for signs of strength or signals that the smart money is getting ready to move the market up. And lastly, this is a period of accumulation by the smart money. So this is when the smart money is buying, the price falls. In other words, they're accumulating the instrument that they're buying. This is when people are panicking and they're selling into the smart money. This is why it's called accumulation. Accumulation can take a little while. Yeah, Fiona's right. The blind leading the blind. I'm sorry, I made one mistake. I apologize. So, Jim, yeah, can everyone else see my screen? Everyone else seems okay. Okay, yeah. Yeah, I'm not sure, Jim. Everyone else is able to see my screen. Might just be a plugin that you need to download or something through GoToWebinar. Right, the accumulation phase, what is it? Basically, as the smart money buys, the market orders come in one after another, create ultra-high volume. And you can see these ultra-high bars, they look like this. Okay, ultra-high bars. And if you're not sure, if you have our software, when you click on them, it tells you what type of volume it is, high, ultra high, low, ultra low, okay? So essentially the accumulation phase is the smart money buying the market, and when there's one after another, it's the ultra high volume. In other words, in the world of supply and demand, okay, demand overcomes supply. It's the demand by the smart money for these lower priced products, and that demand is higher than the supply available by the sellers. Okay, I'm going to read that again. I want to make sure you guys understand that. So the accumulation phase is essentially the smart money buying. Because they're buying so much, their demand for that lower priced good is overcoming the supply that's available in the market. So as time goes on during this accumulation phase, supply equals, or volume equals the supply left in the market. And until they've exhausted that supply, prices cannot go up. Okay? The accumulation or buying frenzy causes volume to go up and price to go down. Gary, they always show up the same. It's the same on any time frame, any market. All right? You want to watch the volume bars. The volume equals buying. And literally it shows that there's more supply left in the market. As the volume goes away, then you know they're done buying. So the price will only go up when supply has been exhausted. Now again, this is in general, most of the time, the philosophy of VSA is in this, okay? You do have a few minor changes, and it's not going to be specifically, oh, the volume went down by 16.2%. It's overall, the price can only go up when the smart money has felt that they've bought everybody else. When they felt that there isn't any more supply in the market, then they're ready to go up. And this brings us to the test, okay? Okay, the function of a test is to test for supply in the market, to test for the floating supply in the market. Smart money is testing to see how much supply is left to buy. I thought that was kind of a cute rhyme for you. Okay, they're testing to see how much supply is left to buy before they're ready to mark the prices up. Now, why do you suppose I used a picture of Tigger? Any guesses? No guess. What does Tigger do? Yeah, Jack's got it. The wonderful thing about Tigger's a wonderful thing. The tails are made out of spring. They bounce. Okay, Tigger bounces. And this is the thing. It could test and retest several times before the market's ready to go up. So it'll bounce or spring several times before it's ready to go up. Okay? Essentially getting tested several times. Here's some characteristics of a test. Again, it's not always 100% of the time, but here's some good characteristics of a test. A test has a bottom tail. It often closes near the middle. It may not have as much of the tail as these two indicate, but it usually has a tail. It often does not close at the bottom. Okay? It usually closes somewhere in the middle to the high. There's always a little bit of a squiggle tail. A good strong test will not exceed the close of the bar behind it. So this is the test bar. Notice how it doesn't breach the close behind it. Okay? And the next bar needs to close up. That is critical. The next bar must close up in order to confirm the test. You will see tests appear, and you click on the indicator in VSA, and it'll say you need the next bar up for confirmation. If the next bar is down, then that means the test has failed. So the background of a test and the future of a test are both vitally important. Okay? The thing is, guys, is also they can be a widespread or a narrow spread because it can be a test in the earlier phase of accumulation where there's still supply left, or an ultra low to no volume when the supply has exhausted. So the spread of the bar on a test isn't always indicative. A shakeout's going to have a very wide spread, but tests can come on narrow spread. It's what they're testing. Remember, it's the relative amount of supply in the market. Okay? So everyone got this? A good strong test won't exceed the close of the bar behind it, and the next bar will be up. It has to be up to confirm it. the test is an umbrella of a few signs of strength. You have test. You also have test in a rising market. You also have no supply. You have basic test, and you have the shakeout. Okay. Nick asks, why is it suggested that you wait for the second bar after the signal? The next bar needs to be up in order to confirm the test. If the next bar is down, the test in that particular time has failed. They're not yet ready to go up. Usually it's because there's more supply left in the market. And I'm going to show you multiple tests. You're going to see this Tigger effect happen. Okay? So these are all the types of tests that you'll see. There's even one more, but I ran out of room, and it's test after a shakeout. And if you look at these dialog boxes, they have very, very close similarities in the description of what they are. All of them will say, wait for the next bar up to be tested. Okay? But they're all variances, similarities of a test. They're sisters, not twins, or cousins. So, confirm two ways. You need two bars to confirm the strength. Wait for the next bar to be up. You need strength in the background. It's vital to confirm strength. And I put my little girly man here. Okay, now a test almost always will be on a down bar. Okay, a sign of strength that's good would be a stopping volume or a climactic action bar behind you. Those are good signs of strength behind you. A test can be on an up bar, and if it is on an up bar, it's a lot stronger, and I'll show you that later in the presentation. But the majority of the time, a test is on a down bar. Okay? But the next bar needs to be up to confirm it. Okay. This is multiple tests. First, let me point out to you, this is the cash index of the mini S&P. Yes, Gary, background is the previous bars that you see. Okay, so this is the cash index of the S&P. It's a 9-minute chart. It was from yesterday. Well, it says October 26th, but it's all the way through. So I want to show you bar A, bar B, and bar C. All three of them have a tail, right? There's a tail, teeny weeny tail. Okay, they're all tests. Okay, notice bar A doesn't breach the close behind it. Bar B just slightly does, and bar C does not. The close after bar A, this bar is up, this bar is up, this bar is up. These are all successful tests. Okay? I'm going to go bar A by bar C by bar B by bar C for you. This first one, bar A, is called the test after a shakeout. All right? It's a new low ground. Literally, I'm getting this from the dialog boxes. It's a new low ground, and I put a check mark because, yes, I have new low ground. See? New low ground. It's ultra-high volume. Yes, right here. I have strength in the background. The same signal appears 24 hours before, and I'll show you that. But I also have weakness. So I have strength in the background, and I also have weakness in the background. So I need to expect to retest this in the future. All right? Again, here's bar A. Here's bar A again. This was my background. This was my strength in my background, meaning previous bars. This is my strength right here, okay, in a downtrend, remember. Okay, and I blurred out my weaknesses so you could see them. So I have strength in the background, but I also have weakness here. I have a no demand, and I have an up thrust. Okay, so that means even though the price went up on bar A, it may not be ready to change trends dramatically. This is the importance of the bar. Okay, you don't look at just one bar, you look at the whole picture, right? Can everyone see that? Everyone understand what I mean by I'm in new low ground, right, compared to everything behind it. I have strength in the background. I have ultra-high volume, but I also have weakness, all right? So I'm going to expect for this to retest in the future. I'll expect the Tigger, okay? Okay, if you click on the dialog box, it'll tell you that weakness has appeared, indicating a potential reversal, and this should give you pause to wait for retesting after bar A. Okay? All right, back to the same chart again. This is bar A. Let's look at bar B. Okay? We're now lower than A. The next bar closes up. This is now a retest of bar A. Can everyone see that, how this is a retest of bar A? And now A becomes the background for B. Just type yes if you understand that. That A becomes our new background. Okay? And it basically makes A now a little bit stronger. So what it said in A, expect retests in the future, is exactly what I get here. I've now had my retest in the future. Okay? This is my background. All right. So bar B is called a basic test. All right. It's into fresh new low ground, so it was lower than bar A. If you notice that. See? It's a widespread down bar, closing on the high, which means it's a shakeout. Okay? Now you ask, Lauren, you just told me it was called a basic test. And the answer is yes. When I click on the indicator, it says basic test. When I start to read, it says if it's a widespread down bar closing up near the highs, it's a potential shakeout. It is. I've now confirmed it. That's why I'm doing a checkbox. So this is literally what I write in my notes. Okay, yep, I'm into fresh new high ground. This is yep. Yep, widespread down bar, closing high, it's a shakeout. This is directly from the dialog box. A high volume test or shakeout may need to be retested. Okay, be aware of that. Make sure that you understand that that's coming. High volume equals demand for lower prices. Okay, and it overcame the supply available. Yes, I can confirm that. I have high volume. Demand for lower prices overcame supply available. Literally, more demand for these lower prices than what people are selling to the smart money. I have strength in the background, and that's my bar A, which is what we were just talking about. Okay? I'm going to go back to it again. So now, this is the test after the shakeout. We had strength in the background. We also had weakness. We needed to pause knowing that it would retest again. We now come to our basic test B. A becomes our background, high volume, widespread down bar, next bar closing up. This is now a retest into a new low ground. Okay? And now we have bar C. And bar C is just like bar A. It's called test after a shakeout. Well, bar B was our shakeout. So notice it doesn't breach the close here. The next bar closes up, has a little tail. It's on high volume. You can tell all of this is high volume. This is all relative to the last 20 bars. This is how this volume works. All right? Test after a shakeout. It's a down bar, which is a stronger sign of strength, right? There you go. Remember, unlike what I just wrote, strength appears on the down bar. Down bar, stronger sign of strength. Literally, that's what it says in the dialog box. If the bar is a down bar, it's a stronger sign of strength. So yeah, let's confirm that. Bar C is tested the shakeout bar B. Check. Bar C does not breach the close of the bar behind it. Check. The next bar closes higher. The test is then confirmed. Now, the second bar closes much, much higher, conservative trader confirmation bar. And I'll show you what I mean. Okay. The next bar closes much, much higher. Okay? Which means that you could go in 2 bars after the test. So you've basically gotten your test. All right? So let me go back and I'll show you right here. All right. So again, we test the shakeout. We don't breach the close here. The next bar closes up, and the very next bar closes up. You can put your trade a tick above the test and let it come to you. So if you'd put it right above here, then as this price went up, it would take you into the trade. Or you could wait 1 more bar if you're more conservative and go in here. Okay? All right. This is another scenario. This is the cash index on the 5-minute chart. All of a sudden, I saw a very strong sign, which is bar C. Does anyone notice the difference between bar C and bar A and B? Look at it really carefully. Bar C is in a different place than bar B and A. Why? Where is it? Remember the third fill in the blank. Yep, Neil's got it. Jerry, I'll answer your question in 1 sec. Brian's got it. Keith's got it. Right. Bar C is in an uptrend. So a test like this is a lot stronger in an uptrend. This is actually called test in a rising market, and it's an exceptionally strong indicator in VSA. Now, Jerry asked me prior on the last chart, are we going to place a pending order on the test even if the diamond in red is in color? Jerry, if you put your tick above the test, now that that was your third test and you've literally tested the shakeout prior to it, you could put your entry above that test and let the next bar come up to you. If you weren't sure, wait till the next bar after that, which clearly went way up, and you could put your order in there. It depends on how conservative or how aggressive you want to be. But Gavin usually puts one tick above the test, and that's where he goes in. He lets the market come to him. And in this case, it would have come to you. All right, so here's a test in the rising market. Bar A is no supply. Okay, now this pink bar right here, can you guys tell that that's pink? I just want to make sure you can tell that it's like sort of a magenta color. All right, what that indicates is that, where did my mouse just go? Okay. What that indicates is that the volume here is lower than the two prior. Anytime you see that color bar, and even the add-ins too, it might be a slightly paler color, like I think in Ninja it's a pale pink, and I think in TradeStation it's a salmon color. But anyway, it's a different color. If the volume is lower than the two previous bars, it changes color. That's just a VSA thing. And no supply requires you to have that, okay? So bar A is no supply. All right, note the pink bar, like I just said, volume lower than the previous two bars. That's for no supply. Caution, the next bar closes lower, not higher. I'll show you. Look, next bar closes lower, not higher, okay? So that means A isn't necessarily a strong test. What do you expect? Now I'm showing you the whole picture. But if you were just isolating bar A and the next bar after it, what could you infer? That there's going to be more testing in the future, yes or no? Exactly. If this bar closed low, which means this test failed. So you need to wait for further signs of strength before you can be sure that we're going up. Okay? So let me show you again. Okay? So no supply means the volume lower than the previous two bars. Caution, the next bar closes lower, not higher. Again, that's a failed test. We need to be wary. We're in a downtrend. Okay? Literally right out of the dialog box it says, if you're in a downtrend, this means that it's going to pause before the prices will rise. This could be a resting ground before they're ready to move up. So you could expect the market to go a little sideways. It's not yet ready to go up is essentially what it's saying. Okay, so this is a slow down caution bar. Can't jump in yet. Caution again. I see test in the background. I see a sign of strength in the background, and then I see a sign of weakness. Literally in the dialog box it says, be careful. What do you see in the background? Okay, so here it is again, same chart, and now we're looking at bar B. Bar B is a test and it's strength coming in, okay? Down bar that closes in the middle is a strong sign of strength. Literally says it right in the dialog box. The down bar that closes in the middle, which is a stronger sign of strength. Good. Now that's the second strength signal we've had. And even though prior to bar A I had strength in the background and I had that weakness in the background, I was still a little weary, still a little cautious. Now I have the strong sign of strength. I have ultra high volume in a widespread bar, and if it's stopping volume or climactic action, it's a very strong sign. Okay? It literally says in the dialog box, this could be stopping volume or climactic action and is a strong sign of strength. So now I've gotten 2 confirmations this is a strong sign of strength. The next bar closes up. There's my confirmation. I'm going to look, it says right in the dialog box, look for more shakeouts and testing. Okay, so we have bar A. There was strength and weakness in the background, and also the next bar closed down, so it's a failed test. So I needed to wait and pause. Sure enough, it goes up, comes down, tests back into here. Next bar closes up, confirms this. High volume, yes. Closes in the middle, on down bar, very strong. Strength in the background, strong again. BD asks, all the volume bars are virtually the same size to my eyes. If you look up here, volume says 20. You can look at the volume, excuse me, by number. That'll help you. It's very difficult in this case when you have a lot of volume this high. I agree with you, BD. The pink bar will tell you that the volume is lower, and the volume number is your amount. So that's sometimes how you can get around it. Nick asks, is there usually the same correlation between bar A and bar B? If correlation you mean, does it retest back into the same area? Yes. It could test back into the same area. In this case, B is now lower than A. So it's the second test. It's also the second sign of strength. Isidore, I love your question. So because you've now gotten 2 confirmations of strength, Isidore asks, if one scout, could one take the next red bar after B? You could take it right here because you've confirmed B. You could also wait one more time and take it here. If you put it right above here, if you put your tick above here, you would have gotten take it into the trade here. It would have gone down and it would have closed up. I probably would have waited. I would have waited one more. Right here maybe. So yeah, you can confirm, go in one more, go in one more. It still said, though, this is very, very high volume, so this tells me that there's still supply left. Yeah, Nick says I would have waited. But Isidore's question was, if one is a scalper, could one take the next red bar after B? And so the next red bar after B is here. So yeah, you could, okay? But the problem is that it hasn't quite confirmed yet. We get our test all the way here. That is your highest probability, low-risk trade entry, okay? Harley asks, will the slides be available for review? Yes. Once I change that one mistake, the strength appears on the down bar. Okay? I'm going to go into bar C for you. Bar C is test in a rising market. Again, it's one of the strongest signs in VSA. Whenever you see a test in an uptrend, it's stronger. So test in a rising market means the smart money does not have to further test supply in the market. This is why it's stronger. This is why Isidore bar C is a better place to enter. On a down bar, okay, so test bar C was on a down bar, which adds stronger weight to the indicator. It tested the high volume behind it, literally testing the supply in the market. Notice it was a narrow spread. I have strength in the background. I have bar B and bar A, and I'm in an uptrend, all strong. My next bar up confirms that it's a test. Remember, you need the next bar up to confirm that you have a test. Okay? It's in an uptrend, makes the test that much stronger. It follows a minor sign of weakness, the up thrust. This means the up move will continue. Literally, straight out of the dialog box, I've confirmed what we saw. Okay? I'll go back to it one more time. All right, so here we go. Doesn't breach the close. It's basically, it says test in a rising market in an uptrend. Next bar closes up. We have strength here, strength here. This is our minor sign of weakness that I was talking about. Okay, it's testing the volume here. Now to answer BD's other question, the pink volume right here means the volume was lower than the previous 2. That's also a good sign. Even when you're dealing with this very large volume, you have to use every clue you have, okay? So here's test in the rising market, and you've basically confirmed everything they've told you to in the dialog box. You can go in right here. Okay, there's your test. You're in an overall uptrend, all right? Now look. This is what happened after. Okay, so remember, yesterday we basically had my webinar was at 4 o'clock. So that was kind of where I had ended yesterday. I went back in and I saw that the trend continued. So here was our test in a rising market. Here was our C. Okay? Okay. Bar D right here is a basic test. Again, testing again. Now, look at bar E. It's a very widespread down bar. What would you call that? And the next bar closes up. Yep, it's a shakeout. Exactly. Okay, I'll show you here. So here's bar E right here. Now, the thing about bar D is, all right, it says it's a test. It's a basic test. But because the bar below it, the bar closed after it, means this test failed. Now you have a shakeout here, okay? Okay, this is your shakeout. So it's a widespread down bar on high volume, and then the next bar closes up, okay? Now, let's look up here. Bar F is another test. It's in an uptrend, and its volume is lower than the previous 2 bars. What would we call that? We have, this is a test. It's lower than the previous 2 bars. This is a no supply, okay? All right, so here's the thing. F is another test, okay? You have a test here, it fails here. You have a shakeout here, the next bar closes up, and the next bar closes up. We've gone sideways here after this failed test, and we've now gone green. We're in an uptrend, and we have a test here. Our volume is lower than the previous 2. This indicator is called a no supply. But what is the problem with G, guys? There's something wrong with G. In other words, was F successful or no? Right. So G closes lower than F, okay? Now, Jerry asks about here. So this bar fails this test. This bar is definitely a shakeout. I would wait 2 bars. Okay? You can be more aggressive, like Gavin says. Wait 2 bars. Wait for your confirmation. This is a white diamond, a white diamond, a white diamond, then it turns green. You can also look in a smaller time frame to confirm what you're seeing. Okay? So, okay. I want to just tell you about bar number 1 and bar number 2. All right? Bar number 1 is a blue triangle. And this is something that appears in VSA. It's a likely reversal in trend, okay? So in this case, you have an uptrend, and then it starts to come down. So they're telling you that it's a potential reversal now that you've had 3 down bars in a row. Now, say we see it down, down, and down, and then we go sideways, and then you see this here after you've seen 3 up bars, okay? You've seen 4 green diamonds, excuse me. And so this becomes the last up bar. They're not always, because this is such a volatile market, you don't want to rely 100% on those, but people always ask what these blue triangles are, and I thought it was important to sort of tell you what you're looking at. So as this goes down, 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 they're telling you this is a potential reversal in trend. As you go up, 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 this is a potential reversal in trend, okay? Nick is asking, it would seem to me that the bar preceding F should be a down signal. Do you mean like a sign of weakness? No, Janet, an up thrust is G. This would be an up thrust, right? It looks like an L, a left L. So an up thrust would be this. This would be an up thrust. This could be an up thrust. This could be an up thrust. It basically breaches up, closes on the low. You're not going to see a signal in every single bar. It's just the way it is. Yeah, Nick, it doesn't always make, there isn't always an indicator. But I understand what you're saying, that it goes up like this on climactic action, sort of with this big, big bar, and it sort of starts to mushroom over, and then this bar goes down again, right? So this is why this failed. This is why this isn't a super strong, this failed, because it went down. So essentially, this weakness in the background is the only thing we have right now, and that's why overall, from here all the way to here, we're in an overall uptrend, because we don't have any weakness appearing. Look, it goes up and mushrooms down and bounces right back. We test it right again and again, and it goes back up, and then it goes like this, and it goes down. So this is where the test failed, and this is where you could potentially see your reversal. So just remember that it's going to test and retest all the time, okay? So here's the end of day result, all right? The same 5-minute chart, this is how it ended up. So after this, after you were asking me how it worked, basically bar A became a test. This is at 1 o'clock my time, okay? Bar B was potential stopping volume. The next bar closes up, it drifts sideways, and it goes up, okay? And you can see that it tested the low of A. So essentially all day, guys, we've been testing, testing, testing. That's what they've been doing. Now, stopping volume is considered a strong sign of strength. We have strength behind us. We're in an overall uptrend, so it's a stronger sign. But you can't ignore the fact that we have weakness here. And Nick's right. Look at it going up. Here's an up thrust, Janet. Here's another up thrust. Here's another up thrust. Okay? So it's mushrooming over. There's absolutely nothing perfect. Barry accused me of cherry picking something, and you know, certainly for my purposes, I'm going to pick charts that work, obviously. But this happened all yesterday. It's pretty accurate. You know, people always ask, what about the small minute charts? Well, we know there's a lot more noise in the smaller minute time frames. Things can tend to grind against each other, pull back, push back. But you can also see that you have a test here, right? Next bar closes up. It comes back down, next bar closes up. This never breaches the close here. This barely breaches the close here, okay? You're in an overall uptrend. So here's the thing. Can you recognize a test when you see one? Can you be patient for 2 bars to confirm your test? Can you understand that testing for supply in a market is called various things, but is the same concept? Jerry asks, when the best place to exit a trade once we take the trade? Do we exit at where we have a trend cluster or when the trend changes? You basically can exit when more sequences start to appear that are moving against you. If you're going along, because you've seen these series of tests, and then signs of weakness start to appear, or the trend starts to change, look at smaller time frames or other time frames around it to confirm it. So if you're in a 5-minute, I think I was in a 9-minute first and then a 5-minute, if you look smaller and it starts to turn white, and then the other ones start to turn red, then you know you've now turned the trend. You can get out. So essentially use your time frames not only to confirm an entry, but also to confirm an exit. You're looking for a VSA principle to appear in order to enter. You should look for a VSA principle essentially to either disappear or a new one to appear to tell you that it's now moving in a new direction. Nick asks, if we don't see a weak signal, then it's safe to assume that we're still in an overall uptrend and it might reverse and go up. Yes, it's going to test several times. It's also a shakeout is usually on bad news. And again, it's not picture perfect. I'm not going to tell you bar by bar this is exactly what's going to happen because none of us are predictors. What I can tell you, though, is overall, we were in an overall uptrend throughout the entire 2 days. Those tests kept testing for supply in the market, and those weaknesses essentially failed. Testing for supply, literally testing for anybody that wants to sell. The smart money does not want to move the prices up if there's still people left. Accumulation is literally they're accumulating or buying as much as they can, and so they're testing for supply or how much is left to sell to them in the market. Okay? And again, if you're in an uptrend, then a test in an uptrend is sort of a pause on the way up, which is why it's a stronger test, like the test in the rising market that I showed you. Barry asks, if nobody is selling, how can the price go up? Exactly. Exactly. Once people are finished selling into the smart money, they're selling into a down market, and the smart money is buying it. It's counterintuitive to what you think. They're buying into a falling market, and they're going to wait until there's nobody left to sell before the prices go up. That's exactly it. You answered your own question. Terry asks, do these principles apply when you do not know volume, such as Forex? Volume is actually used in Forex. Our VSA indicators work in the Forex market, and the volume is used the same way. Okay? Jerry asks, the test we saw now has the volume to be high, so we not take the trades on only tests with low volume, or am I wrong? Because this test has high volume and it was successful. The hardest thing about that chart, Jerry, is that the volume all across the whole thing was relatively high. Overall, relatively high. The pink bar showed that the previous two bars had closed lower, but basically you need to read the dialog box and see where it is. The dialog box, or the indicator rather, uses the spread, the volume, and the close of the bar. That's how the algorithm works, and the algorithm appears, an indicator appears when we see that. So despite all that high volume, you need to read the dialog boxes to see what you're seeing. And literally what I did with those check marks is said, do I have this in the background? Do I have this? Did the next bar close up? I essentially walked myself through my own checklist, and you should do the same thing. So think like the smart money and wait for the test confirmation before entering the market. Like we talked about, it's probably better to wait 2 bars, especially if it's grinding against you. Place buy orders above a test. Let the market come up to you. If it retests, you aren't stopped out. All right. I'm going to give you some phrases. See if you can make some sense out of these words or phrases. Strength, background. How would you make a phrase or a sentence about that? Yeah, Jerry makes a good point. You know, you have tests all day, in his case in the Forex market, but you had high volume, so you get a little nervous. It's weird. I just think we're seeing so much professional activity, Jerry, that you essentially have a lot of volume. But you've got to read the dialog boxes, and you've got to figure out where it's testing, what price is it testing at, what do you have in your background. Again, how would you make a sentence out of this? Exactly. Terry's right. Cormel raises a great point. The money has to do the accumulation or the buying, and they need to add liquidity in the market at the same time. And also, as order after order after order comes in, then you basically are going to have all these high volumes, and you're exactly right. So, yeah, preceding bars are strong. You need strength in the background. Good. All right, try this one. Next up. How would you make a sentence out of that? The next bar needs to be up. Good. You got all of this. All right. Test supply. How would you, what is this about a test? How would you make some sense out of this word or phrase? How would you finish this sentence? Yep. Oh, good. You guys all got it. Absolutely. So you need strength in the background. You need the next bar up to confirm. Volume on tests determine how much supply is left in the market. Let's try this one. Shakeouts, very what? Shakeouts, very... No, Bernie. Yep, David's right. Next, right? Yeah. Yep. Okay, let's try this one. No supply, lower. No supply is lower than the... No supply is lower than... David's got it. Nice job, David. All right, uptrend, strong. Uptrend, strong. How to make a sentence of uptrend, strong? And I'll give you the end. Jerry, you're right. Well, if you see a test in a rising market, how would you fit that into uptrend strong? Okay, listen to me. A shakeout, I should have taken the A out. Shakeouts are often on bad news and are the only ones that are on very widespread, meaning the other ones aren't necessarily absolutely have to be on widespread. You can have, we showed you narrow spread tests, okay? Shakeouts are always very widespread. That's their 100% always. You don't have a shakeout if you don't have a widespread down bar, okay? A no supply has volume lower than the previous 2 bars. So nice job for everyone that got that. And a test in an uptrend is the strongest test. Okay. I know I learned this if I can recognize how the background plays a role. Nod your head or shake your head. I can't obviously see you do that, but I expect bad news when I see a shakeout. I can put in my own words what a test looks like and behaves like. Sally, just email me. I'll give you my email at the end, and you're more than happy to, I actually said at the beginning too, I'll happily give you the PowerPoint presentation. It's no problem. Just email me and I'll send it to you. Okay? I can put in my own words what a test looks like and behaves like. I can tell someone else how tests are used by the smart money. So when I was teaching, I used to have the kids write down, you know, whatever it was that they reacted to. Like I might give them a political cartoon, or I might give them an article that they had to read, or a section from the textbook, or some article. And I would have them write their reactions or what they thought about it. And then I would have them explain that to someone else. Once you've explained it in your own words to someone else, you've actually begun the learning process. So you've seen this in the way I've described it to you, or you've seen it in the dialogue box. And then what you've really done is you put it in your own words and you've told someone else. If you can explain it to someone else, not your dog, someone else that's human, if you can explain it to someone else, then you've got it. Because you've essentially figured out the nuances of it so you can explain it. You can explain it by what it looks like, how it acts, when you typically see it, what you need in the background, what you need after to confirm, when the best place to take your entry. It could be any of those things, any aspects of those. But if you can tell someone else how tests are used, then you're good. All right, here's free tricks or treats. I figured I'd do trick or treats since it was Halloween this week. You can get Gavin's book absolutely free called The Complete VSA Sequences Explained. There are signs of strength in there. There's 10 signs of strength sequence setups that you'll see in there, and the dialog boxes are behind them. Again, you'll see lots of tests, and the dialog boxes are printed out so you can see the explanations, literally what I just did and kind of went through my checks. Just email me at Lauren, S for Snedeker, at tradeguider.com, and put in the subject line free book, and I will send you the Complete VSA Sequences Explained. My pleasure. It also includes the first 4 chapters of Gavin's book, Trading in the Shadow of the Smart Money. Gives you an overview of market manipulation and how he came to TradeGuider and the bottom line essential principles of VSA. Okay? And also use this email to email me if you want the PowerPoint presentation as well. I'm more than happy to give you that. Okay? So, Jerry's asking me, what is the meaning of the volume when the color is black? If the bar is black, it closes even. A black bar is closing even. Okay? All right, now you have special trick or treats. You can own end-of-day software for $499.95, which is 50% off. Own it lifetime, not lease it. You can own the real-time software for $999.95, not lease it. Again, 50% off. People ask me all the time, what data feeds does the RT support? It supports eSignal and real-time data only. Those are the only 2 at the moment that it supports. Okay, and we also have a very special, we have an add-in study for many different platforms and charts. And Creation is one of the few that we are able to, it's actually the only add-in that we're able to offer ownership to. The other ones we're not able to because of the third-party agreements that we have. But you can own the VSA add-in for TradeStation for $999.95. Typically, this price is for 1 year to lease it, and you can own it if you'd like to. Okay. Someone asked, why doesn't RT support the Infinity data feed, the CR? It's just the way it was built. RT was built that way, and it only has those 2 data feeds. We do intend to change that, hopefully in V5 or V6, but at the moment, that's all it has. So that's usually the #1 question that people ask me about the RT. Okay. In all cases, you'll get the education tools. You'll get the chart reading masterclass, which I highly recommend. You'll also get Gavin's book for free, the Trading in the Shadow of the Smart Money. And you'll get the VSA Club, depending on which product, you get the VSA Club for a few months, 3 months for TradeStation, 1 year for end of day or RT. So you can call me. This is my direct line. You can email me. You can Skype me. I'm sorry I didn't put my Skype. I ran out of room here. Okay. And I will upload this video. And I will also send you again the PowerPoint presentations if you need them. Expect the video to be uploaded onto the site tomorrow. Barry asks about the end of day. People use end of day for holding long-term positions, not for intraday trading. It's also a cheap way to get into VSA and learn it. And it has daily and higher time frames. So particularly with stocks and someone that is not going to sit in front of their computer all day that wants to hold a long position, end of day works well. All right, I want to thank all of you very much for listening today. And if you have any questions, email me or call me. Okay, thank you so very much, and you guys all have a wonderful day.